You are staring at a trial balance that simply will not balance.
Oh, yeah.
I mean, 1 minute, accounting feels like simple, pure arithmetic. The numbers are clean. The logic is flawless. And then, the very next minute, you are somehow exactly $10 off, and the entire financial picture just stops making sense.
It is the absolute worst feeling.
Right. And whether you are 23 years old and, commuting to your very first junior accounting job, or you're 38 and trying to close the books on your lunch break, you know this exact agonizing feeling.
Oh, intimately.
But what if I told you that this frustrating imbalance isn't a dead end? It is actually a precise map pointing directly to what went wrong.
It absolutely is. I mean, that discrepancy, it's not a failure. It is the system communicating with you, basically telling you exactly where to look.
Welcome to our global audience joining us for this deep dive. Today we are covering accounting error correction and suspense accounts.
Yes, we are.
We will break it into 3 parts, look at a real-world example, and finish with 3 exam tips you can use immediately. So let's build our foundation first. What is, the absolute simplest way to define a suspense account?
Well, at its core, a suspense account is just a temporary holding account for a bookkeeping entry, and that entry will end up somewhere else once the final and correct account is determined.
Okay.
That is the fundamental rule you need to keep in mind for this entire topic.
So if we translate that into everyday terms, it is basically like a kitchen junk drawer.
Oh, I like that.
Right, because you find a random battery or a weird screw, and you put it in that drawer temporarily because you just don't know where it belongs yet.
Exactly.
But you obviously can't leave it there permanently, or eventually the drawer overflows and your entire house is a mess.
That analogy works perfectly. And here's something that actually often surprises people about how modern technology has changed that whole junk drawer concept.
Oh, really? How so?
Well, in the old days of manual paper ledgers, an unbalanced journal entry might just sit there on the page until the trial balance stage. And then a suspense account would automatically be generated to make the final numbers work.
Right, because it's just paper.
Exactly. But in modern computerized accounting systems, a suspense account does not just magically appear on its own.
Wait, really? If the numbers don't match, doesn't the software just, generate an alert and throw the difference into suspense automatically?
Not without human intervention. A computerized system will outright refuse to accept an unbalanced entry.
Wow.
It demands equilibrium. So because of this, a single-sided journal entry without a corresponding debit or credit is impossible in the real world.
It just blocks you.
The software literally will not let you click save. Therefore, a bookkeeper must purposefully create the suspense account to force the system to balance.
So it's not some passive accident. You have to actively choose to put that item in the junk drawer just to move on with your day.
You do. You really do.
I mean, instead of thinking of it like playing accounting detective, it is really more like a financial tourniquet.
But tourniquet, I love that.
You are applying pressure to stop the system from keeping it alive while you prep for surgery to find the actual error.
That is exactly the right mindset. You are essentially buying yourself time to investigate.
So whether you are trying to pass your CPA exam or just trying to survive an IRS audit, there is a reason evaluators absolutely obsess over this topic.
Oh, they love it.
Why is this tested so rigorously?
Well, it comes down to business reality. Identifying why systems do not balance is a daily reality in literally any finance department.
Right, because humans make mistakes.
Exactly. Things get miscoded, receipts get smudged, entries get duplicated. Fixing these issues proves you understand the actual physical mechanics of double entry bookkeeping rather than just, memorizing a rigid list of rules.
There are 2 reasons examiners love this.
Yeah.
Here's the first. It tests pure system logic. And the second is that it forces you to reverse engineer someone else's mistake. But the catch is, not all mistakes actually break the trial balance, do they?
They don't, and that is the massive trap. The evaluator wants to know if you can identify which errors actually affect the suspense account and which errors fly completely under the radar.
Give me an example of flying under the radar.
So if you completely forget to record an invoice, the system is still balanced. It is factually wrong because you missed an invoice, but it is mathematically balanced.
So the examiner is basically testing if you can clean out the junk drawer without accidentally throwing away the good silverware.
That is a great way to look at it. You need to know what actually belongs in the drawer and what never even went in there in the first place.
Let's get into the actual mechanics of what creates these imbalances. There are three parts to this. Let's take them one at a time.
Okay, let's do it.
What is the first way we end up using a suspense account?
The first way is through an uneven transposition error.
Uneven transposition. Got it.
Yeah. This happens when you have different figures for your debit and your credit. Let's visualize a business making a cash payment for, let's say, plant repairs.
Okay.
The actual cash out the door is $32, but the physical receipt from the supplier is smudged, and it looks like it says $23.
Okay, let me map this out. So the bookkeeper records a $23 debit to plant repairs based on what they read on the receipt.
Right.
But they reconcile the bank, and they know the actual cash out the door was $32, so they credit cash for $32.
Correct. And when they hit save, the system screams, hey, you are off by $9.
Ah, because 23 and 32.
Exactly. So to force the save, the bookkeeper debits the suspense account for $9.
Simply put, it's a typo that breaks the balance.
It is the most common human error out there.
Okay, so that is what happens when we make a typo. But what if the numbers are completely right, but the bookkeeper just fundamentally misuses the software?
Well, that brings us to part 2. The error of posting to the same side of the double entry.
The same side?
Right. This is when a user attempts to post 2 debits without a credit, or 2 credits without a debit.
Right.
Say they have a $50 accrual for electricity. They get confused, so they debit the accruals account for $50, and then they also debit the electricity expense account for $50.
But hold on, we just established that modern systems demand equilibrium. How does a computer system even allow 2 debits to process without a credit?
Well, it doesn't.
Oh.
The bookkeeper sits there, staring at 2 $50 debits, realizes the system won't save, and they just don't know what to credit.
So what do?
To force the math, they just dump a $100 credit into the suspense account to make the computer happy so they can go home for the day.
Ah, I see. They are knowingly bridging the gap just to bypass the software's firewall?
Precisely.
But what if you only have half the story to begin with?
That is part 3. The error of omission to one side. You see this constantly during bank reconciliations.
Right, bank recs are notoriously messy.
Very. You are staring at the bank statement, and you see a random $300 deposit.
Yeah.
You know you have to debit the bank account to reflect the cash coming in.
Because you'll literally have the money.
Right, but you have no idea which customer paid you, so you don't know who to credit.
So you debit bank for $300, and you just credit the suspense account for $300 until you can call around and figure out who sent the wire transfer.
You've hit the nail on the head. That's exactly it.
So to bring that together, a suspense account is born anytime your debits and credits physically do not match, whether from a typo, a double-up, or a missing half.
That is the unifying logic behind every suspense account you will ever encounter.
Now we are going to take everything we just talked about and apply it to a global, real-world example.
I love a good real-world scenario.
Let's talk about Michelle. She runs a small business. She's doing her own bookkeeping, but she is still kind of getting the hang of it. It's her financial year end. She is prepping her trial balance, and sitting right there, just glaring at her, is a mysterious $1,010 credit balance in her suspense account.
Oh man, the ultimate year-end nightmare.
Right. So she starts digging into her records to find out what actually went into the financial tourniquet.
Good step 1.
Let's hone in on one specific mistake she made. Error number 5 in her records. It's a contra-entry mistake. Walk us through how this happens.
Well, a contra entry happens when you do business with a company that is both your supplier and your customer.
Okay, that makes sense.
In Michelle's case, she owed a supplier $400 for some materials.
Maybe she owes $400.
But that exact same supplier had also bought something from Michelle earlier in the month, and they owed her $500.
Let me pause here to make sure I'm following the business logic.
Yeah.
Instead of Michelle wiring them $400 and then them turning around and wiring Michelle $500,
Yeah.
they just agree to offset the amounts. Keep the cash in the bank and just clear the ledgers against each other.
That is the standard business practice. It just saves everyone transaction fees. But here is where Michelle's lack of experience created a big problem.
What did she do?
To record this offset, she processed a journal entry to remove the full $500 she was owed, the trade receivable.
Okay.
And she also removed the $400 she owed them, the trade payable. That is a $400 debit to payables and a $500 credit to receivables.
The entry doesn't balance. She is off by $100.
Oh, exactly.
So to force it through the system, she dumped that $100 difference into the suspense account as a debit.
But wait, isn't clearing the biggest number what most software basically suggests you do to match invoices?
Yes, software will often suggest clearing the full invoice because it just assumes that the transaction is settled.
Right.
And if you are an early career professional, maybe 22 or 23, your instinct is probably going to be a little bit of panic when you see this imbalance.
Oh, absolutely. You see a big $500 receivable, you see a $400 payable, and you might just trust the software, clear the biggest number to make the accounts look clean, and, just hope nobody asks about the $100 difference.
You just want the red alert noise to stop.
You really do. But senior professionals know that software defaults can be incredibly dangerous.
Yeah.
People who have been doing this for a decade know that you can only offset the lower amount to reflect true economic reality. The lower amount here is $400. You can only cancel out $400 of debt against $400 of credit.
Because if you cancel out the full 500, you are essentially forgiving $100 of debt that they still legitimately owe your business.
Exactly.
You are literally throwing away your own company's money
Yeah.
just to make a spreadsheet look pretty.
Which is why the multi-step fix is so crucial here. We have to look at what she did versus what she should have done.
Okay, lay it out for us.
She should have only debited trade payables for $400 and credited trade receivables for $400. That leaves $100 still sitting in receivables, waiting to be paid in cash by that customer.
But she credited receivables for the full 500. She completely zeroed it out.
Right. So to correct it, we basically undo the wrong and redo the right.
Okay.
We process a journal entry to debit trade receivables for $100, reinstating that debt so the company can actually collect it later. And we credit the suspense account for $100, clearing out that specific piece of the junk drawer.
And that right there is exactly what the examiner is testing when they ask about correcting contra entries. They aren't just testing if you know what a debit or credit is. They are testing if you understand the underlying economic reality of two companies owing each other money.
Exactly. And they are testing your metacognition, your ability to recognize that reversing an error is almost never a one-step process.
Which perfectly brings us to the single biggest thing students and professionals get wrong when they are doing these error corrections.
Oh, it is what we call the doubling trap.
The doubling trap.
Yeah. The single most common mistake across the board is forgetting to double the amount of the original entry when you are fixing an error that was posted to the wrong side of an account.
Let's slow down on that.
Yeah.
Why would we need to double the amount?
Because of how the human brain processes mistakes under pressure. When we spot an error, the brain immediately thinks, oh, I just need to reverse the mistake to fix it.
Right. That feels logical.
It does, but it forgets that reversing the mistake only gets your balance back to zero. It just takes you back to the starting line. You have erased the mistake, sure, but you still haven't actually recorded the correct transaction that happened in the real world.
Okay, let's test this with another example from Michelle's books to see this in action.
Good idea. Error number 1 in her records is a perfect example of this exact trap.
Okay, what did she do?
Michelle had $8,980 in sales returns. Customers sent physical goods back to her, but she accidentally recorded of that $8,980 by processing a sales invoice.
Oh, wow. So instead of recording a refund, she basically recorded a brand new sale.
Exactly. She increased her revenue, and she increased her trade receivables, the money customers owe her, by $8,980.
Ouch.
Yeah. Now, when someone reviewing the book sees this, their brain says, she accidentally increased receivables by $8,980. I need to reduce receivables by that exact amount to fix it. Just credit receivables.
Okay, hold on. Let me map this out. If I just credit receivables for $8,980, I have only deleted the fake sale.
Exactly.
The receivables account is just back to where it was on Tuesday morning before she ever made the mistake.
That's the dangerous part. You are back at zero. But remember, the actual real-world transaction was a sales return. Customers sent physical goods back, so you still need to reduce receivables by another $8,980 to account for the actual refund.
I see it now. Her receivables account is currently overstated, not by $8,980, but by double that amount, $17,960.
Yeah.
You must reverse the false sale and record the correct return.
And that is a huge cognitive trap. To fix it properly, you must debit revenue for $8,980 to cancel the fake sale, then debit sales returns for $8,980 to record the actual return. And finally, credit trade receivables for the full $17,960.
It is exactly like driving 10 miles in the wrong direction on the highway.
Oh, that's a good way to put it.
You don't just drive 10 miles back to reach your destination. If you drive 10 miles back, you are just sitting in your original driveway.
Right.
You have to drive 20 miles. 10 miles to get back to where you started, and another 10 miles to get to where you actually needed to go.
That is a phenomenal visual. Under exam conditions, or, when a manager is breathing down your neck during month-end close, the brain just defaults to the easiest path. It just wants to drive the 10 miles back. You have to actively fight that instinct.
We are moving into our final phase, your exam edge. We are going to give you 3 specific, actionable tools to handle any suspense account question, whether on an exam or in the office. These are crucial. 3 things. Here's number 1.
Number 1. First, identify if the error actually involves a suspense account at all.
Okay.
Do not just assume every mistake needs one.
Well,
We mentioned earlier that some errors fly under the radar. For instance, an error of principle, like putting a $500 laptop purchase into an office supplies expense account.
wait, why doesn't that trigger a suspense account?
Mm.
If it is categorized wrong, should the system catch it?
Because the software only looks at the total dollar amount on the left and the right. As long as you entered $500 on the debit side and $500 on the credit side, the computer does not care if you accidentally categorized a laptop as paperclips.
It's blind to the context.
Exactly. The math matches. The equilibrium is satisfied. So no suspense account is triggered. If you try to use a suspense account to fix an error of principle, you will instantly fail that part of the question.
That makes a lot of sense. Tip number 2 is what we call the 3-step visual.
Yes, I highly recommend this.
When you are staring at a mess of debits and credits and your working memory just starts to overload, grab your scratch paper and literally write down these 3 headings. 1, what has been done. 2, what should have been done. 3, what needs to be done to bridge the gap.
Such a good strategy.
Don't try to hold all 3 stages in your head. Write the wrong entry. Write the perfect entry, and the fix will literally reveal itself in the white space between them.
Writing it down physically lowers your cognitive load. You don't want to do that mental gymnastics.
Absolutely.
And tip number 3 is to actively hunt for the doubling trap we just discussed. Whenever you see an error where something was posted as a debit but it should have been a credit, or vice versa, draw a big circle around it on your paper.
A physical reminder.
Exactly. Remind yourself before you even touch your calculator that this is a reversal error, and you will likely need to double the adjustment amount to actually reach your destination.
Ultimately, a suspense account isn't an error itself. It is a temporary bridge keeping your system alive until you figure out the right accounting treatment.
It is a diagnostic tool, pure and simple.
For our younger listeners out there, maybe you are early in your studies or just starting your career, do not panic when you see a trial balance that doesn't balance.
Yeah, take a breath.
It feels overwhelming to see the red numbers, but it is just a puzzle.
Yeah.
And now you have the exact analytical tools to solve it step by step.
And for the experienced professionals listening, mastering this proves something crucial. It proves you understand the deep, underlying logic of financial systems.
That's so true.
That ability to reverse engineer a system's logic is what makes you absolutely invaluable during any real-world audit or year-end close. It really separates the data entry clerks from the true financial controllers.
We started this deep dive talking about staring at a trial balance that simply will not balance. We talk about how that $10 discrepancy feels like a dead end. But hopefully, you see now that it is the exact opposite.
It really is.
That frustrating imbalance is not a dead end anymore. It is your starting line.
Suspense accounts are just temporary holding pens waiting for your accounting diagnostic work. The clues are all there, just waiting to be read.
I want to genuinely thank our global audience for joining us today. If you found this breakdown helpful, please follow the show on Spotify and take a quick second to leave a review. It really helps us keep bringing you these deep dives.
Yes, please do.
So the next time you find a weird screw in your kitchen junk drawer, ask yourself, are you going to just leave it there to cause problems later, or are you going to figure out what it's actually holding together? Thank you for listening.